Okay. Did you get it started over there on all the other social medias? Are we on camera? We're looking good. Does Zach look pretty? Do I look pretty? Awesome. Cool. All right. What's up, Eric? How you doing, man? Hey, guys. All right. I want to talk about markets and technology. I have a very special treat for you all today. I have my Chief Technology Officer. A lot of folks, at least if you're in my market in El Paso, Texas, you have seen Zia Homes spiral up. When we bought the company in 2018, it was not doing well. In fact, a lot of people would say it was failing. The company's upgrades included things like sheetrock and boring ass 8-foot ceilings. It was, not something that most folks would have been proud of. We have since redesigned the product, redesigned the amenities, redesigned every aspect, but probably more importantly than anything, we have reinvested in technology. When there was an economic downturn in the tech sector a few years ago, we did the move where we went and invested in people, okay? And no, I don't mean that in the bad way, I mean that in the good way. We looked at how do we find the right individuals to help us create an outcome that's going to get us hedged for the future, okay? We didn't want to go and buy a technology from all these hustler salespeople that were out there, pushing this product or that product and saying, hey, I'll make all these big promises, yet they'd never worked in our industry. We wanted to create something of our own. We wanted to create something that would actually work within our business model. I mean, a lot of tech guys have never worked in your industry. If you want to go into the future and be successful, you need to go into the future and do it in a way where the technology you're leveraging works in lockstep with you. I mean, technology is not a new word. Fire was a technology for the caveman. The wheel was a technology for, folks back thousands of years ago, right? I mean, good governance is a technology, if you can believe it, that has put America on the top of at least the food chain with countries, although that may be in question now. And so there's a lot of different ways to look at technology. When we think technology in today's day and age, though, we think digital technologies. And I wanted to bring Zach on because Zach is probably one of the smartest people I know, and I think he can add a lot of value to you all in what to do in your day-to-day lives. Are you a realtor? Are you a loan officer? Let you guys do a little Q&A with him on technology. I'll also talk about markets because there's a lot of really cool updates there. I mean, we still got a government shutdown. We've got a whole lot of craziness to talk about in the stock market and, the real estate market with rates, with the Federal Reserve, with labor data, all of that stuff. Thank you for the hearts. Thank you for the likes. Those really boost everything. So you guys keep that coming. I love it when you do that. But without further ado, my friend and a resident genius at our office, Zach Abrams, talk to us a little bit about tech and how it's changing today. And make sure to speak as well as you can into the camera.
I know I asked you about markets. I got wrangled into a lie. That's how it goes. I think it's good that you mentioned solving boring problems like sheetrock. I think in technology, I think that's where a lot of companies miss, especially when they're starting out, is they try to solve the shiny problem, not the problem that actually is real. And especially right now with AI agents, and then before that blockchain and big data before that, all really cool technologies, and they have amazing uses and they're changing everything. A lot of times people lack the clarity of what the purpose of the problem they're solving is to actually use those tools effectively. So whereas you could have solved your problem with a quick automation and not paid thousands of dollars, you're going out and adding AI agents to something that doesn't really need it.
And let's talk quick automations, because I want to talk about one of the things Zach did for us. The first thing he did when he came on board, we wanted leads. Zach, can you talk about the leads you got for us, the divorce leads? Which, if you're a home flipper, and we were a large home flipper at that time, we kind of shifted into builders, so all you home flippers watching, you're going to get a dirty little secret. How hard was it? You didn't need AI, you didn't need a machine learning, you didn't need a million technologies to go get us leads for people that might be getting divorced and own homes. Can you talk about that process and how simple it was?
Yeah, well, we knew we had a really well-defined problem, right? We're like, well, we need leads, and we know who these people are.
And you know what? Let me frame it first.
Sure.
Home flips come from 4 Ds: death, drugs, disease, divorce. These are the 4 Ds of home flipping, and we wanted to capture divorce leads, okay? We wanted people who were getting divorced that owned homes that had equity. All right, there, better framed. Sorry, now Zach, go.
Very clear purpose, right? So we knew exactly what we're trying to solve, and the data exists, right? So we know that we can use public information to get information about divorces and property ownership, and using relatively old at this point technology, just web scraping, and then sending those leads over to our salespeople. Pretty simple tools, right? Web scraping, simple databases, simple CRM use. But that all comes from a very clear problem. If we didn't know what we wanted when we started, that could go a very different direction.
What level of tech person would the average business in their office need to be able to create these algorithms? This is not a machine learning. This is not, I mean, look, guys, I'm not going to give away secrets that are going to hurt our business today, but I'm going to tell you some things we did a few years ago that really gave us big advantages because you can copy it now. Do they need to go buy a $300,000, $400,000 a year chief technology officer? Could they just get somebody who's a reasonably good techie?
Yeah, I mean, and especially now with AI and a lot of the vibe coding platforms, you could go and ask ChatGPT to write a web scraper for you to go find, property information or demographic information. You don't have to go and buy data from huge data brokers. Now, getting a lot of this information has gotten harder as we've seen, new AI coding platforms and low-code platforms. A lot of the information is being protected by CAPTCHAs and things that are trying to avoid people scraping that information. Of course, you always want to do it legally. You don't want to have to say this. You don't want to, abuse somebody's terms of use or terms of service, right? But it wouldn't take somebody who's super technical at this point, especially with all the new AI tools we have. But somebody who's got, who understands how web pages work, basically.
All right, thank you. So that's one simple example and a real story that we use to generate leads for a real estate brokerage that shows you that little hacks in technology can be leveraged. This is just an algorithm. It was literally something pulling data from open APIs. And API is like where computers, I guess, talk to each other and networks talk to each other. And so the public data on divorce filings was available. And you could compare that to the MLS, which has an open API. And you could figure out, okay, are they getting divorced? Do they own a home? And is there equity? And you could do that with a relatively simple algorithm and then all of a sudden get listing leads. How valuable would listing leads be in this last few years to most realtors out there that have been struggling with inventory? And if you're dealing with sellers that need to sell, you actually have inventory. So that's one piece of technology. And I'm going to keep Zach around and we're going to kind of keep going into technology questions here and there. But I also want to give you guys a little market update right now because I know we don't have a tremendous amount of time. We've got like limits of most an hour for this. And I want to give you guys some time to Q&A with my resident genius. And hopefully go get one of your own as well. But right now, guys, the government is shut down. You don't even need to be smart. I mean, please, if this makes sense, give me some likes, give me some hearts, give me some shares, put some comments in there, help me with my algorithm. But because I want people to understand this, there's so much noise out there and you don't want to deal with the noise. You want to deal with the signal, not the noise. When you find the signal in the market, you can get ahead of the market and you can become successful. There's all sorts of doom and gloom people. There's all sorts of influencers that go out there and, oh, the sky is falling. And look, there's always some sky falling, but there's always somewhere where the tide is rising as well. And when you're involved in markets, when you're involved in business, when you're involved in investing, your goal is just to be ahead of it. So yes, there's still a government shutdown. Yes, that's causing significant pain. Yes, both of our political parties are stupid. Okay, we've gotten through all of that. Let's dive into what is new. The ADP labor data that came out last week, guys, was horrible. It was absolutely terrible. And during a government shutdown, you don't get data, okay? With the data that we have compiled and the ADP data recently, the betting markets on rate drops are through the roof, meaning there will be rate cuts. It is highly likely, unless some crazy black swan event comes out and Jerome Powell turns around and says, no, I really want to crash the economy harder, you're going to get rate cuts. Rate cuts are going to drive mortgage rates down, and here's why. You've heard this before on other lives, but there's three competitors for long-term money. Mortgage bonds, treasury bonds, and money market accounts. And if you are a wealthy investor, money market accounts are extremely liquid and pay as much as the other two do, okay? And the 10-year treasury really competes with the mortgage bonds. So right now you have a lot of cash on the sidelines in these money market accounts, which are directly influenced by the Fed. So as the Fed drops rates, money markets will go down, and these investors who are highly capitalized will have to put their money. And I know that the banks are starting to get stressed because JP Morgan just reached out to me yesterday and said, hey, we'll give you these really high money market accounts, higher than the market if you'll move some money in. Trust me, guys, JP Morgan's not doing that unless they're losing some deposits. And right now, they must be losing some deposits because they've already inched down for some of their existing investors. Okay, we got to think about this. Like every year, your cable bill, your phone bill, your internet bill seems to just like jump up. And if you call them and act like you're going to cancel, they lower it. Well, what's probably happening is they had people at higher rates. I mean, I don't know this. I'm not speaking for JP Morgan's business model here, but they had people at higher rates. And what happens? Well, the Fed turns around and drops the rates. They say, okay, well, we can't keep you at that rate. They start losing some money back to the markets. We're seeing mortgage rates drop a little bit. We're seeing treasury bonds improve a little bit. And then what happens next? Oh, wow, you know what? Like JP Morgan's reaching out to other people that they know have big deposits and saying, can we give you some money? So this is happening, and this is real, and this is right now. So what does that mean for you? That means, yes, you're still at the bottom of the real estate market. Well, what other markets could you invest in? I made you guys this little list today, and it's kind of fun. If you guys message me on my social medias, I'll give this to you. This is an interesting thing, and I recreated it because we did it at a seminar years ago. And this is the 15 places that you can put money, okay? And this explains why markets are doing what they're doing. Like, you can put money in like thousands of different places, but there's kind of 15 general categories. And if you go right down with a pen right now, you're going to find out it's very hard to come up with 15 categories. Like, you have to put some work in to come up with 15 categories. So where can you put money? And this will explain why markets are where they're at. 1, real estate. 2, business. Your business specifically, right? 3, stocks, which is what? Other people's businesses, publicly traded companies. 4, bonds, which is effectively like a debt instrument to a government or some large entity, right? Insurance, like life insurance or something like that. Money market accounts. Cryptocurrencies. Currency trading, like little forex trades. Like, I think, the Indian rupee is going to do better than the dollar, so I'll invest there. Futures or derivatives, gold and precious metals, loans. You could loan someone money. Commodities, you could invest in, hey, you know what, I think cattle is a really important thing, or I think copper is a real important thing and it's going to go up. Collectibles or luxury assets. You could take a play out of my little book recently and go buy an airplane. I don't recommend that unless you are really doing well. They are not profitable. They're good tax write-offs, but not profitable. Infrastructure investments, toll roads, pipelines, that type of thing, or tax hedges. And tax hedges really depends on what the government wants at the time. Guys, what does that mean? That means there's like 15 different broad places you can put money. And look, this is boring. This is probably not what you guys wanted to wake up and do on a Tuesday, but it's really important for teaching you where to put your money, okay? When you're looking at these 15 places, what are you thinking is the safest? And right now, the safest thing people have thought to put their money in, and I'm not talking about you, I'm talking about the big money. And who should we duplicate? Probably the wealthiest people. Put a little smiley face in the comments if this makes sense. Where have the wealthiest people put their money? The stock market. The New York Stock Exchange, okay? The New York Stock Exchange today, and I'm talking the NYSE and NASDAQ combined, has over $60 trillion of wealth in it. Now, if we've been through effectively what's called a rolling recession over the last few years, a rolling recession, which means every industry has had kind of little downturns, if that's what we've been going through, how are people still putting money in the stock market? Well, it's not just our people. Yes, the top 10% of America is putting money in the stock market, but what about the rest of Earth? America's economy recovered from the COVID crash a little better than others, so we didn't just get our rich people, we got everybody else's rich people. Well, now everybody's freaking out about the stock market. They're like, oh, it's at all-time highs. Oh, real estate is stalled. How come stock is such a unicorn? Well, I've come up with a few reasons for you, because a big part about markets is knowing when to buy and knowing when to sell, having a technology. And then we'll get into some Q&A for you. But a big reason for that is central banks all over the world have lowered their interest rates. Ours is the slowest to the party, right? Well, that means money gets cheaper everywhere. Another big reason our stock market hasn't dipped much is a lot of the smaller players have already gotten out due to the turmoil, due to an affordability crisis which caused the rich to get richer and the poor and middle class to get poorer. So the small players that normally run during crisis have already left. And we have our large players, and now we also have large players from every other country on earth. Okay? And technology has made this possible. So as we're looking at some of the other factors, government spending. We've devalued our dollars. Zach, how often do we talk about government spending?
Every day.
What are your thoughts on government spending? Like you and I have some differing views on some things, similar views on other things. But when we're talking government spending, I'd love to hear kind of your thoughts as you see the world going around.
The short version is we need to spend smarter.
So is government efficient, Zach?
No.
Zach and I don't always vote the same way, guys. Zach and I have very differing opinions, but we also have this thing called respect where we treat each other nice. And Zach and I both agree on one thing, like hands down. The government is kind of stupid, okay? Like you give them $1 and they're very good at turning that into 50 cents. Like the government is doing their damnedest to put dumb blondes out of business and take that away from them. The government is the new blonde joke, okay? These people cannot figure out how to do anything efficiently. I mean, look at the stuff they fight about. They can't even figure out what a word means. You guys know what the word politics means? Like if you look up politics and what it means, I mean, effectively over thousands and thousands of years of human history, politics is the art of creating compromise. Do we see any of them doing that? Are any of the politicians creating compromise? Are any of them figuring out how to make the world a better place for everyone? And hey, you know what? I have these ideas and you have those ideas and those ideas. Let's come in the middle and find a way to work together here. It doesn't really work that way with our government. So unfortunately, our government's very stupid, and they're spending a ton of money and they're devaluing our currency. We've got a global economy where not just our rich people, but all the rich people on earth have put their money in our New York Stock Exchange. And cost of capital has gone down, and the small players that would generally run away have run away. So when do we think this is going to pop? Here's my prediction. Okay, now I will say this with poly means multiple, ticks or blood-sucking arachnids. Yes, you got it right, Taryn. Absolutely right. I think our stock market will pop after America has gone through their rate cycle downward. Okay? And the reason for it is people are going to be bullish as money is getting cheaper. So once we bottom out on rates, and we start seeing inflation coming back up substantially, which I think there's a lot of indicators that it will. I mean, guys, tariffs are inflationary. They may be not now because the companies and the countries are eating it just to create trade, but at some point, those tariffs are inflationary. And if they're only inflationary enough to create a one-time bump, you know what's inflationary enough to not create a one-time bump? The countries that want to go back to having an advantage. So say like Trump gets out of office and these other countries that have obviously played games for 40 or 50 years start playing games again. Guys, that's inflationary. That's inflationary behavior. So all of a sudden inflation will pop back up. We'll start making money more expensive. So start watching the inflation rate. Like you should ride, and this is what I'm going to do. I'm not telling you what you should do. I should never tell anybody what they should do. I'm going to ride the stock market up, even though it's massively overvalued, until I see the Fed talking about raising rates. Once I see that happen, or some other black swan event, then I'm going to start pivoting away. I'm very bullish on real estate for what's coming. I'm very bullish on stocks for the next year to 3 years because I think when Trump drops rates in May, it's going to get better. So, Zach, I'd like to, now that we've kind of hit some of the markets, because I know a lot of people tune in for that, I want to chime in to what are some ways like a realtor or a small business can jump into technology. Not everybody can go out and hire a professional like yourself, but everybody could download an app or something like that. Can you dive into some of the ways that people can chime in?
Yeah, the barrier to entry is lower than it's ever been with AI. The flip side of that is the barrier to make mistakes is lower than it's ever been too. So I think it's really important, no matter what your size is, to have a very clear idea of what problem you're trying to solve with technology before you try to go solve it. And whether that's going and trying to solve it yourself with AI or vibe coding tools, or if you're going to hire a consultant firm or hire somebody else to do that for you, you want to know exactly what problem you're solving. So, for example, if you're a real estate agent, you're looking for more leads. How are you keeping your leads? Are you using a CRM? Are you using basic automations to follow up with your leads inside that CRM?
Hold on, let's say that again.
Yeah.
How are you using your leads? Are you using a CRM? CRM is a dirty word to so many people with the real estate agent personality. I mean, yeah. I love real estate agents. The thing that makes them amazing also makes them annoying. They're always pushing, they're running, they're hustling. But to a lot of agents who have that flamboyant, salesy personality type, they're the most fun person at the party. They're not organized humans. Should they be worried massively about AI, or should they be worried about hey, I better get a damn CRM. I better figure this out. How do they like, what could convince them to dive into that? Because their personality is, in a lot of cases, that flamboyant one. It's not the organized one.
I mean, I think a good place to start. So if we're talking about real estate agents specifically, a good place to start, if you're not using a CRM, if you're not like tech literate, or even if you are, write down all the tasks that you do in the day. And then, maybe feed those tasks into ChatGPT or Claude or your AI of choice and say, hey, how might I easily automate these tasks? Right? Like I said, the barrier to entry is really low now. You have basically an expert in your pocket that gets things wrong sometimes, but it's still better than what we had, 2 or 3 years ago.
I think it gets things wrong more than my friends that I go drinking with. Less than my friends that I go drinking with.
Yeah.
Which is where most people get their advice.
Yeah. So write down all the things that you're doing, the repetitive tasks that you're doing. Write down how you're managing your leads right now. So are you keeping a notebook with all your leads in it? Do you have a Rolodex like it's 30 years ago? Are you using a CRM? Do you know the features that you're paying for inside that CRM? Do you know how to use them? Again, it comes back to that defining the problem. If you don't know what problem you're trying to solve, then how do you know which tool to pick? So go find those repetitive tasks, make yourself more efficient. If you're not tracking your leads, if you're not seeing, when was the last time I followed up with a person? When was the last time I, sent them an email, marketing email? Do I not have call recordings for these? These are all small features that make a huge difference especially when you're kind of bouncing all over the place, you're working with 50 different people. Just storing the information so you can go in an organized way so that you can go back and reference it easily is the first place to start.
A really funny thing, and I want to chime into this with this, because I learned tech from Zach, guys. Like, I am not necessarily a techie person. Like, the tech that I create is incredibly good efficiencies. Like, I work with psychological technologies to make sure that, we have good culture at our company, and then I work with efficiency technologies. But when it comes to the techie side of tech, I learned from Zach, okay? Now, what I mean by that is I know what I don't know. And when Zach started bringing different aspects like CRMs into our business, I actually understood something that a lot of my billionaire friends talked about for the first time. Okay, I have several friends in my phone that have that B in front of their net worth marker. And what's really interesting about them? It's very hard to get them talking about business. These people talk about family, they talk about vacations, they talk about life, they talk about all the things that are important to them. And you have to wait through that for most of them because they know what success is and it's not money to get to business. But when you do start talking about business, they all tend to go to one area, and that is cost of customer acquisition, which is a really difficult thing to track. Like, if you know how to track your cost of customer acquisition, it's pretty easy to track your lifetime value of a customer. And when you can take your lifetime value of a customer and you can subtract cost of customer acquisition, guess what? Now you have a duplicatable, replicatable business model, a funnel, if you want to call it that, and it's going to bring revenue to your business aggressively. Hopefully that gets some hearts, some likes, some comments, some shares. Because if you're not listening to that, if you can't listen to the billionaires giving you the financial advice, I'm telling you stuff directly that I've had from multiple billionaires, then you will fail financially. But how quickly, when you brought in even the simple stuff, Zach, you've built some incredible stuff. We can talk about ZBuilder in a minute and some of the technologies there that you built for our home building company. But even the simple stuff, just the CRM, what was the timeline that it took us to get to cost of customer acquisition? 3 months, 4 months?
It's pretty quick. It depends on where those customers are coming from. And just a quick aside, it matters where, not only where your customer is coming from, but how you're storing that information, right? If you're not storing any of the information, you're never going to get those answers. So again, going back to clarity of your problem, if you don't even have the information, then that should be the problem you solve first. And that was the first problem we had to solve when we brought the CRM in. We weren't tracking leads anywhere, at least not in one place. It was all siloed away in people's phones or written down or in spreadsheets, right? So the first step in that first 3 months was getting the information, starting to get the information in, getting the buy-in from the people that you need to use the system in order to get that information, which in our case was the agents, and that was our hurdle, right? That's another big thing, right? Clarity of your problem. Also, user acceptance, user onboarding, that's a huge problem with technology too. If it's too hard for people to use, if it's too hard for you to use in your business, right? Let's say the technology solves your problem perfectly, but it takes you twice as long to do it now, bad technology. Don't use that technology. Go back to the old way of doing it. Figure out a different way of solving the problem. But yeah, I think it took about 3 months for us to get to the initial cost of customer acquisition. We're still refining it now. As we bring on more lead sources, as we enrich our data with other demographic data and that kind of stuff.
All right, guys, I want to take a moment and give you guys the opportunity to ask questions. I'm bringing on a very highly paid expert today, and he's an expert in technology. He has built us the first home builder tech that is specifically designed for home builders, frankly, in the country, that has AI integrations. Like, you can't even go out and buy what he has built us. And we are using it for Zia Homes. And it's one of the main reasons that Zia has grown so efficiently. I like to think it's my beautiful eyes, and you guys are welcome to chime that into the comments if you agree. But I don't know that that's true, okay? And nobody seems to agree that, it's my beautiful eyes. So unless I get somebody that wants to, compound my narcissism here on the beautiful eyes, we'll just go with it is the technology. And so I want to give you guys the opportunity. Do you guys have questions for Zach? We got one over here. What is it, Dom?
What do you think about AI bots for CRM?
What do you think about AI bots for CRMs?
It's a balance.
Good question.
It's a balance. We've tried them out a few times. The thing is, they still get things wrong sometimes. So it depends. Are you talking about initial follow-up calls? Are we talking about cold calling? Are we talking what kind of interaction with your leads? We haven't had great experience with them cold calling or being the first point of contact for customers. They seem to work better when we've already interacted with a customer and the person knows that there's some person that values them on our side, and then it's a value add to them to be interacting with an AI agent. So they don't have to wait on a person. They're still getting the information they need, but they don't think that that's all they're ever going to get. I think it depends on where in your lead cycle you're using the agent.
And can we chime into, that's one of the new areas of kind of fraud or whatever, how many people are calling around offering to build you AI agents? You need to also work with credible sources.
Yeah, I don't know. Some of them it is just fraud. I think because the barrier to entry to developing software and to build AI agents or to build automations is so low now, you have a lot of people without a background in software engineering or systems analysis building these things, and so a couple things happen. A lot of times you're trying to solve the shiny problem, so you don't have a good definition of what your problem is, no problem clarity. You have somebody who's a good salesperson and they're riding off the back of a lot of hype, right? The AI wave. And so the biggest way that you can kind of get around that is knowing first what the problem you're trying to solve is and finding somebody with a track record of building things that solve problems.
One thing I think we could also jump into, our own story of some of the malfeasance there. Remember that company Gigster? And they knew damn well that they couldn't help us, and they made us a bid for $250,000 or something like that. And I think we got, 150 grand in with them. And they sold both of us. They sold Zach too. This was a company that we hired to put together some stuff because we didn't want to just build our own. We had 2 or 3 big tech ideas, and we wanted to do one of the tech ideas with them and then build our own as well on another one because we just didn't want to have 40 tech guys at the office. So we figured bring in a big firm and have our tech guys manage them. Tell that story. And this was not a small company, guys. This was a big one.
Yeah, they're a big company. I think that a little bit goes back to clarity of your problem and was a learning experience for me too. We wanted to build a lead generator that uses machine learning to score leads for us. What we didn't know, that was the unknown going into it, at least for us, was the availability of the data and the cost of that data that we were going to need to train the model. And we got kicked down the road for quite a while with being told that we were going to have the data and that it was going to be easily available next month. It'll be easily available the next month after that. So learned a couple of things there. First of all, maybe a little more invest a little more time in making sure that the data to solve your problem is available. And cut it off early, because I think we had conversations, even if a couple months in, that, hey, this might not be going the way we want it to. But hindsight's 20/20.
Yeah, well, you brought it up a couple times, and I think I let my excitement push it forward. But I think one of the things that shocked us there, and it's why we believe in building tech in-house, and why I think everybody should be. If the organization you work for right now doesn't have a technology department that is actively building tech in-house, I think you should probably at least, maybe not immediately, but, advise your boss that, hey, this is where the future's going. We need to be a part of the future. And if your boss is stuck in the past and is not willing to do that, so is the dodo bird and they're extinct too. So you might want to go and look for an organization to work with that's going to be there in 5 or 10 years. Okay, things are going to change, and one thing we can count on is things are going to change faster than they've changed in the past. They're not going to start going slower. Like the Industrial Revolution, which started, over 100 years ago now, things have accelerated and accelerated and accelerated and accelerated, and they're not slowing down. I mean, the magic of capitalism is everything starts getting bigger. The problem with the speed of getting bigger is the people that are the least sophisticated get left behind. I mean, guys, even Jesus said, you will always have the poor. When somebody was like, why are you wasting these oils on him? You will always have the poor, right? Like, let's think about that. What does the poor mean? Okay, and I'm not here to knock anyone who's not doing well. That's not my goal. But I want to say, like, those who learn what the wealthy know will become the wealthy. And yes, I get it. Money will not buy you happiness. But poverty is a really stupid fucking idea. Like, we shouldn't go with that one either. Like, so if we're going to make the argument against money, then make as much as you can and give it away to causes you believe in. And I think that a real goal needs to be figure out what those who are winning are doing. If you do that, you will succeed. What's really interesting about those on top, and this is what I've found and I've been blessed by it, is they want to lift everybody up. Nobody on top that I've met is like trying to guard their space. The ones that are trying to guard their space, they're not on top, okay? The ones that are trying to guard their space are fucking terrified. These people are like, oh, like I gotta protect what I got, which means what they have isn't really worth that much, okay? If, I don't have to go protect ZBuilder. Like Zia Homes Technology, if any builder wants to call me and say, hey, how much does it cost to frame a house? I'll tell them. You want to ask me how much paint buckets are? I'll tell you. Like, I got no issue sharing things like that because I want you to be successful. Now, if you come and say like, oh yeah, I want your ZBuilder product that has made you the largest builder in El Paso inside of 8 years, and you've done something faster than anybody except George Thomas in El Paso history, well, I can't just give that away. Maybe one day I'll sell it. We're not there yet. But, like, I don't have to protect that. I don't have to be worried about that because I know it's not easy to duplicate, and I know that anybody that wants to create something of their own is going to spend millions of dollars. And so what's really interesting is the people that are protecting are not the people that you should be looking for. Well, let me read a comment here. We got great content. I'm a pool builder and I'm interested in trying to make my office work done 90% by AI. I don't know that I would recommend 90%.
I got a question for that.
Yeah, let's chime in with a question. Let's see what.
So if you want 90% of the work in your pool building company done by AI, question: do you have written SOPs for 90% of the processes in your business right now? And if the answer is no, then we don't understand the problem well enough to do that.
Okay, yeah. So he framed the question: do you have your processes 90% written out? So there's a big thought, right, that AI is going to come and replace people. It's not. Like, if you think about what makes a human being, it's consciousness, which implies reason, which implies intelligence, which implies, like, you're going to think your way through a problem, okay? And AI is not replacing people that have to think. AI is replacing remember that John Jacob Jingleheimer Schmidt, his name is my name too, like the factory worker that literally does the same thing every single time, every single day. That's who AI is replacing, guys. They're replacing the secretary that just answers phones, that just routes calls. They're replacing the people that don't have to think. So AI is not there to replace people. AI is there to make people better. It's there to help people process information faster and make decisions faster. It's there so that you can grow without downsizing. Like, Zia has gone through some of the craziest markets, and we haven't had to do any layoff cycles that were significant. A lot of builders have dropped lots of people in the last few years. We haven't had to do that because our people are many times more productive. I mean, our average competitor has at least double the staff and in some cases triple the staff of Zia Homes. I mean, what do we have, 10 or 15 people in our office? Like 10 or 15 people to run a company in our office that's doing more revenue, in most cases like 80 to 120 million in revenue, I think, is where that company lands annually. And so it's pretty significant revenue for 12, 15 people to operate, okay? And so when a lot of these other builders are having the big upswings and the big downswings, and they're doing the layoffs, it's because they haven't leveraged the technology properly to make their people better. Let me look at your questions. About 65 to 70% complete. I am implementing Scribe. Yes. Oh, I don't know what I did there. Yes, I want to replace the repetitive daily grind stuff. Yeah, and I would say, it looks like your name is O, or that's your handle or whatever. What I would do is I would look at where do I take the people that are currently in my business and how do I excite them and empower them about the new opportunities they're going to have with the technology. Okay? You'll grow your way through it. These are great comments, great questions. Are there any other comments or questions that anybody has chimed in? No?
No.
All right, well, let's give everybody a few minutes to chime in on questions, and I will talk about some of the things that I'm currently watching. And, and I think one of the ones, we got somebody here, Candace. Market eyes aside, are AI stocks a bubble that's about to burst? What are your thoughts there? Zach, what are your thoughts on AI stocks? That's a really good question,
Controversial
Candace.
question.
That's controversial, but it's good. Like, shoot, Candace, good question.
That is a great question. My opinion on this changes almost daily, unfortunately. I don't know. I think we often, there's a quote, and I don't know who it's by, but we almost always underestimate technology or overestimate technology in the short term and underestimate it in the long term. So I think there's a lot of hype around it right now. I think it's going to fundamentally, and it already has, changed the tech landscape permanently. So I think there's a lot of value in the stocks. I don't know. And I don't know enough about like the valuations and the profit and loss. I know that like OpenAI isn't predicted to make any money until 2029. I don't know if they're on track to do that. But there's a lot of hype, right? And whenever you see a lot of hype around something, everybody speculates about a bubble. I think there's a lot of value. I think a lot of the problems that are being solved by AI that are the bigger, well-known ones are shiny problems. Again, like they're maybe not really solving real things. This is also not my expertise. I'm going to put a caveat on that. But it could be. I don't know. Preston, do you think it's a bubble?
I think a lot of the large caps are in a bubble right now, and I think one of the big things that's going to come is kind of a sectorization of small caps. Okay, I'm investing very heavily, which is it's funny because everybody's like, oh, you want to be in uncorrelated investments, and I'm so heavily invested in real estate in my business and everything else. But I'm investing in home builders. I've invested significantly and made a lot of money on Open Door. I'm investing in gold. I'm investing in hard assets, but the home builders I'm investing in, they're for the most part, they're not the large cap stocks. I mean, they're healthy companies, but they're small caps. And what I believe is going to happen is you've got all the money, not just in America. The top 10% of America owns 90% of the stock market, all right? But now you've got declining interest rates in the rest of the world. So you've got all this money from the rest of the world, and they're looking at the stock market. Let me give you kind of the stock markets, just so you guys can see it. The United States stock market, according to this list, is $62 trillion. You know how big the Chinese stock market is? 11.8 trillion in dollars, okay? The third is Japan at 6 trillion. You go to India at 5 trillion. Like, we are the best place for the wealthy to invest on earth where they're the most confident about returns. And all those central banks have already dropped rates, which means money is cheap, which means they're dumping money in and they're riding the highs. So I think we have globalization and low interest rates globally artificially pumping our stocks. And I think as those entities, those giant entities, like the only way for stocks to crash is for people to get out of stocks, for there to be an exodus. But the poor and the middle class are not really in stocks right now because they've been through a very tumultuous economy. So what we need to see is these big entities, these giant companies, these governments, these funds, all over the world that got access to cheap money. And let's be real, if you're a billionaire in America, you have access to banks overseas as well, you can get cheap money. So there is a market for cheap money right now, and it's a global market that's propelling our stock market, and that is what I see going on, and that's why we're at all-time highs, even though the poor and the middle class have in many ways got out. So what do I think is going to happen? I think you're going to see, like I said, a sectorization of small caps. And I think it'll be very industry specific. I think you're going to see kind of the real estate sector. Real estate, guys, is always looked at by economists as an early actor. I mean, think about it. Everybody was talking about inflation, right? You know what was happening about 6 months, a year before the world was talking about inflation, before every human being in America and on earth knew what that word meant? Real estate was experiencing it. We saw lumber prices double. We saw everything double. There were little blurbs in the magazines and newspapers about real estate prices and lumber prices going up, but inflation wasn't a mainstream word. We're an early market indicator, okay? Government is a late stage indicator. So I think you're going to see all these different sectorizations of where stocks are, and you're going to see the money moving to the different sectors. It already does this, but it's less democratized than I think it could be. And if I had to make a prediction of what one of the things that technology is going to do, is it's effectively going to index the sectors in a more democratizable way to the public so that they can ride these upswings. So real estate, okay, well, what'll happen next? Oh, okay, well, we'll go here. Oh, what's happening right now? Oh, government's going through it. You know what? That means that probably real estate's going to boom right after that. You know, I looked at government as a late stage cycle and invested 400 grand in Open Door. That's worth $4 million now, okay? And so one trade, because I made a bet based on index cycles, you know, which I'm doing personally. I don't have some advisor doing this for me, but I think AI is going to make this possible. I don't think you're going to move the money out of the markets. I think you're going to move it around within the markets. And I think your large caps are overvalued and your small caps are undervalued compared to your large caps. So are AI stocks going to crash? No. I think they're a huge upside win for, you know, technological growth on Earth over the next 10 to 30 years, okay? And I think you could have ups and downs, but I don't think they're going to crash because at this point, they're a need. Like, you talk about our race with China as a government, we need AI to beat China's AI. Like, if we want to stay a global power, we're not gonna let our AI stocks crash. So with those specifically, you got to look at the forces that affect, you got to look at the inputs, right? And if this makes sense, guys, please like, share, comment, please keep doing that. It always helps the algorithm. And we do this because we want it to get out to the most people. But that's my thoughts on the AI stocks specifically. Is I don't think they're going down because they are at this point a need for our nation. And I look at our nation like an entity. Every entity's main goal is survival, okay? This is why we don't watch how a politician's lips move. We watch how their feet move, because then we know the real direction they're going in, because their lips are often lying, okay? They're manipulating you, they're lying to you, they're not telling you the facts, but they're going in a direction, and you can generally measure that there's gonna be some momentum that's gonna keep them going into a direction like that until they stop. Does that, I hope that answers your question. That was a very good question. Are there any other questions? No? All right, so I'm bullish on small caps. Let's see, we got one here. When do you think AI will hit a point of oversaturation? Will it be in terms of use or price? So that's a really good Zach question.
There's a couple things.
That's a very good question.
That's a good question. There's a couple things that contribute to that, right? So right now we know that all of the companies are operating at massive losses. Specifically, we're talking about AI, we're talking about LLM specifically. They're very, very expensive to run, right? Energy prices are going to increase. There's a national security component to that. I don't know. That's another really hard question to answer. I don't know if we don't reach cost break even. Can you read the question for me again, Preston?
Yeah. So when do you think AI will hit a point of oversaturation?
Oversaturation.
Will it be in terms of usage or price?
Well, it depends. Yeah. Honestly, probably price. That's going to be the limiting factor. There's speculation that it's going to be monetized. There's going to be ads, other ways of propping up the price. But again, they're very expensive to run. So price is probably going to be the largest contributing factor, at least from my perspective right now. And when you say oversaturation, do you mean like there's no more opportunity for new companies, or are we saying, or is it some kind of other saturation? What did you mean by that?
Well, let's give him a second answer. And I think also in oversaturation, you were talking about some OpenAI is doing right now to make it harder for new companies to start up. So I mean, in some cases they're building a better mousetrap.
That's kind of where I was going to. Yeah, yesterday with the release of their SDK, their app SDK, basically they're taking applications that you'd normally go and use, like for example, the Spotify app. You'd go to that app and you'd use the app. Well, now OpenAI is trying to drive it so that the application lives inside of ChatGPT, and I've seen a couple comparisons made, moving from web to the App Store, right, in 2007, 2008, or the web in general, right? So where your content's being served, if they can make it so that a lot of your content's being served through their platform, well, now they have control over it, and that's something that could be monetized too. Did we get a response to what was meant by oversaturated?
Yeah, he says in terms of company management or personal usage.
I'm still confused by what that means.
I guess it's oversaturation in company management or personal usage. Like, maybe by oversaturation, he means it's. You'd talked AI kind of dumbing down itself when it started learning from itself.
Yeah, that was a concern a few years ago. Yeah.
Yeah, I mean, could that be oversaturation?
No, I'm so like.
Maybe we need to know what he means by
yeah.
oversaturation. You know.
Can you be more specific?
Yeah, clarify the question if you can on the oversaturation. I think it's a very good question, but it's such a big topic that it's very difficult to
I want to answer the wrong
really,
thing.
really specifically answer. Zach does study AI and machine learning more than anyone I know. One of the first conversations I had with him about AI, and this is super interesting, was, you know, AI, at least like the grandfather of AI, if you want, is like 80 years old. And I was like,
100
what do
years
you...
old. AI as a technology is old.
Yeah.
It's not new.
I'll let you say it, please. Go ahead.
Yeah, I mean AI is not new. Like it's not a new thing. It's not even a last 10 or 15 years thing. AI's been around since I think I would have to go look up like specific dates, but 100 years, right? In some form or another. LLMs are relatively new.
What is an LOM?
A large language model. So that's the one that when a lot of people say AI, that's what they're referring to. GPT, Claude.
But AI, like a machine learning computer, basically is what beat Bobby Fischer, the chess expert.
Or tried to, yeah.
Yeah.
Mm-hmm.
So, I mean, machine learning and
It's been around for a long, long time.
And so this is not a new technology. So oversaturation is a complicated question. Okay, so the clarification, where it starts to dictate the way the company operates overall.
Oh.
We will see more companies do this.
So you mean where we're not in the driver's seat anymore, and where AI is driving the company instead of us? I think we already see that. I think we see technology as already the driving force behind most companies, right? We put the information into systems. Those systems give us back out, dashboards and reports and forecasts, and then we make decisions based on that information. So I think technology is already driving the company. If we're asking when is it going to be sentient and start making sentient decisions for the company, I have no idea.
Yeah, that's a different question. But I'll give it an example that Zach has built for us with Zia. We have more information than probably any builder in this market. Like, we know exactly what lumber pricing is doing relative to paint or sheetrock or anything else. Like, our AI came out and kind of let us know. They were like, hey, dude, the last time you negotiated paint, and our AI, it was our software in general. I don't know if it's the AI or any of that. I'll let him speak to that. But it kind of said, hey, last time you had paint negotiated, your inputs were oil at $135 or $130 a barrel, and now it's $60. That's a major input. You should go look at what paint costs. And we did. So it's providing data that's engaging us to behave in a certain way already. I mean, this is already happening. We're able to see how many homes are you starting, how many homes are you framing, how many homes are you starting, how many homes are in slab, how many homes are in frame, how many homes are in different various like rough stages, how many homes are in sheetrock, how many homes are in cabinets, how many homes are completing. And we can see this all through the chain, which gives us the ability to start more homes evenly, and or see if, hey, you know what, the plumbers are behind. We better go get more plumbers. Hey, you know what, the electricians are behind. It helps us when you can take these things and they can map out your lots. Like, some of the largest ways to lose money in home building is theft, right? Like, well, there's theft of lumber because they're using your frame materials to build ladders. There's theft of, they overbill on rock walls. I mean, what if you put your plat into your AI? Well, then your AI is like, you should have this many perches of rock wall, period. So when you get something very different, now, you used to be able to handle that with a person, but an AI can do that in 2 minutes for 1,000 lots, and a person might take a month and a half to do that. So like the 2 minutes versus the 2 months, like the data it provides is so powerful. All right, let's see. We got Candace saying, should we be looking towards quantum computing being that AI won't be revolutionary soon? So I think the thing that's the thing that people may be scared of in the market is when quantum computing, AI, and robotics all mix. Like that's what people I think fear. That's the Terminator movie, right? All right, and then we got the clarification here. But what happens when more companies start to use the same technology? How do you get ahead again?
I don't know. That's a great question. if we could have asked that same question probably, when, before the first .com bubble, every company has a website now, and now it's no longer cutting edge.
Well,
I don't know
let
what
me
the
give an
next
example.
cutting edge thing will be. If I could answer that question, we would be.
Yeah, we'd be trillionaires.
Yeah.
But like a historical example is everybody had the wheel, right? Everybody had the wheel. I mean, what do you have now? How many car companies? And there's cars that are faster, and there's cars with different types of utility. You've got trucks, you've got over-the-road semis, you've got race cars and sports cars, but they're all fundamentally based around the internal combustion engine and the wheel. So a few technologies start merging in and giving people the ability to innovate new technologies with those technologies. So when technology marries other technology, you get this sort of tech revolution, and you get this beautiful market. So I don't think in a situation like this, there's a tremendous risk. What we're scared of is we don't know what tomorrow looks like, okay? We don't necessarily know what tomorrow looks like. But history doesn't repeat itself. It does rhyme. And in every other circumstance in history, people have taken any new technology, married it to other technologies, innovated further technologies, and created the society we live in today, which arguably, if you are poor in America, you have a better life than oftentimes kings had, in ancient Europe. You could eat bacon for breakfast, chicken for lunch, and steak for dinner, if you're poor middle class in America, and a king might get one type of meat a day, or a lord, if we go back 1,000 years ago. We have a pretty good life, we have a pretty good society. Technology has made everything pretty amazing, and technology married to technology has created massive democratization and innovation of new technologies. So hopefully that answers that question.
I think that's an almost impossible question to answer, but I like the train of thought. What's next after AI? What will give us the edge? I can tell you that not using it right now will put you behind, at least in some way.
Yeah. All right, do we have any questions over there, ladies?
Yes, I have one. Do you think AI threatens the future for realtors?
Absolutely, AI threatens the future for realtors, but it's not the most pressing threat to realtors. The most pressing threat to realtors is their inability to unite. The most pressing threat to realtors is who they follow. I mean, whenever I look at an organization that has no plan and no leadership, and it's feeding and fighting with itself, I think that organization is either dead or on its way to dying. I think that the real estate community got a big indicator of where it's going when the people they pay, NAR, the National Association of Realtors, settled that lawsuit. I've heard people brag and say, oh yeah, I'm so glad they settled this lawsuit. That way we don't have to fight it in court. Well, if you believe you were right, you should fight in court, one. And two, when you make a settlement, $400 million settlement, you have basically put so much blood in the water that you've now attracted every shark, okay? The attorneys that did those class actions have not gone away. In fact, all they've done has been encouraged to do more. They found the soft underbelly of your market. And the real estate industry is, the biggest threat I think it has is the laws of the real estate industry are, the broker is the fiduciary to the client, okay? And the agent is the fiduciary to the broker. So the agent serves the broker, serves the client. But we all know, if we've ever met a realtor, that's not how it works, okay? The realtor has the client, and the broker kisses the realtor's ass if they want to keep the realtor. So fiduciary, effectively, based on law, is dead. Now, we still teach that in schools, and we still hope that people honor it. But if you look at where brokerages have gone by nature of what they are, they've all turned into flat fees. They don't have money, enough income to do their compliance. They're not able to manage their systems. And you can just measure this by the amount of TREC complaints an organization has, okay? Just go look at how many times they're getting in trouble, right? They should, if you get in trouble, you should probably look at yourself and say, well, why is this happening? How do I get ahead of it? But if you don't have the revenue, resources, or money to do that, the industry has gone away from the law. And this really happened when technology changed. The residential brokers were ununited, and for all my realtor friends, I love you, but this is true. The commercial brokers did not give their data to big tech. You still have to go buy LoopNet or CoStar. The residential brokers gave it away. They bought into technology. And you have every freaking tech company out there like Zillow or others trying to replace you. You now fund and sponsor the companies that hate you by buying Zillow leads.
Interesting aside. So this new SDK where they're bringing the app into ChatGPT effectively, their initial offering of companies I think there's only 6 or 7 of them, but one of them is Zillow. It's like Spotify, Zillow, and a handful of others.
Yeah. So, I mean, if I'm in the real estate industry right now, I'm very aware that, you know what, home values have gone up significantly. So you've gotten the biggest pay raise of any career field there is. Okay. Because, you know, if everybody else has dealt with inflation, you haven't. Like, no offense, realtors, you haven't dealt with inflation because, yes, your lifestyle cost went up by 10%, but if you're a good realtor and you're closing consistent amounts of homes that you were closing, you know, at all times, which the good ones have never stopped closing homes, then your product has gone up how much in value, right? How much in price, which means your commissions, if they're, you know, consistent, I think they've started dipping after the NAR lawsuit, but not substantially, are also higher than they've ever been. So right now it's the best time in history to be a realtor, but, you know, right after everybody gets like drunk on all that, you know, free money coming in is right when governments and municipalities and regulators start coming out and trying to say, hey, how do we clean this up? And you're already seeing it. Like, you know, when they're talking about real estate becoming more affordable and declaring a real estate emergency, I mean, there's been mentions of, do we eliminate title companies? Because AI could replace those overnight.
Can I add something to that too?
Yeah.
I think one of the biggest things and I'm not a real estate agent, but the biggest differentiator that real estate agents have, and the biggest value, at least from my perspective right now, is the interpersonal communication you have with your clients. That right now cannot be 100% replaced by an AI. People can still tell when they're dealing with an AI. They want that relationship with a human being. So your relationships, and I think this has always been the case, but it's even more so now, your relationships with your clients leverage AI to communicate more effectively and build better relationships. There's more tools out there now than ever. That kind of complicates things too, but at least try to use the tools and you'll be ahead of most people and focus on the relationships.
Yeah, and we have a question here. Do you think the real estate will affect home improvement sector? Yeah, I think you're going to have a lot of realtors becoming contractors, and I mean, they're going to want to stay in the housing industry. They love it, so there's going to be more competition. I mean, I've seen this recently because I did it. Okay, I'm generally early to the game because I sit there studying like a nerd with a giant head and tiny shoulders economics. And when I study those things, guess what I find? Problems. And then I go and act to get ahead of the problems. And sometimes I act way too early. Like I bought my home building company in 2018 because I saw all of this, you know, and I thought this will be an issue, right? Well, it turns out it was not an issue until what, 2023, 2024? So, you know, I was early. But now you look at, I mean, another great real estate agent that has trended success, love him or hate him, Mario Ayala. He's becoming a builder. He's doing the same thing. We've seen Lane Harris do it as well. So some of the most successful and most sophisticated agents are already exiting, and I think they're just the beginning. You're gonna see a lot of people flooding out. You're gonna see recessions killing the weak ones, and the good ones are gonna go into other industries where there's profitability in that industry. All right, guys, I gotta go jump on a coaching call. I appreciate all the Q&A. This was a blast, this was fun. Do me a favor, put some likes, some hearts, share this post so others can go see it if they wanna watch it. You know, share it on all the social medias. I want this to be out there so that people can get this information. There was a lot of good questions. Thank you guys. I mean, you guys could do anything with your time. You can, you know, go and have a beer. You can go out to a restaurant and party with friends. You can go watch Netflix. There's all sorts of things you can do, but you came here with me to grow. And so I appreciate y'all, and I hope you all have an amazing day and are able to leverage this into some profitability. You guys have an